It's 12 p.m. Eastern, and the market is giving us one clean contradiction. Bitcoin is still holding the upper $67K area, while broad crypto sentiment is stuck in extreme fear. That divergence is the only headline that matters right now.
Quick session check first. Crypto trades 24/7, and at Tuesday noon Eastern Time, U.S. cash equities are in regular session, not weekend or holiday mode. So this is live risk repricing, not a post-close narrative.
Development 1, Price Structure. CoinGecko has BTC around $67,491, down roughly 0.5% in 24 hours. ETH and SOL are both modestly green on the day. That's not a trend break lower. That's a choppy, selective tape.
Development 2, Derivatives Positioning. Binance BTC perpetual funding is still positive at about 0.004621%, and open interest is around 78,556 BTC. Translation: there is leverage in the system, but we are not seeing full long capitulation yet.
Development 3, Sentiment remains cold. Alternative.me fear and greed is at 10, labeled extreme fear. So price is resilient, but confidence is weak.
Development 4, Liquidity Backdrop. DeFi Llama stablecoin data shows total circulating stablecoin USD up roughly $0.91 billion over the last 7 days, about a 0.3% increase. Not explosive, but directionally constructive.
Development 5, On-chain congestion is calm. Mempool recommended fees are low, with fastest around 3 SAT/VB and 30-minute around 1 SAT/VB. That tells us this is not a fee spike FOMO phase.
Development 6, Market style is still BTC-led. CoinGecko global data puts Bitcoin dominance near 56.18%, which usually means capital prefers liquidity and relative certainty over broad altcoin expansion.
Put it together. Price is holding, sentiment is fragile, leverage is present, liquidity is slowly improving. Those gears are not fully aligned yet, which usually increases fake breakouts and fake breakdowns before the next clean move.
Let's add 2 verifiable public voices from open data signals. First voice, Binance public derivatives prints still show positive carry for longs. Second voice, Alternative.me still flags crowd risk appetite as extreme fear.
Exactly. When positioning and sentiment disagree, that's often the setup window where direction gets decided by liquidity and leverage mechanics, not social media mood.
Adjacent theme check, AI and robotics remain relevant cross-asset risk on barometers. DeepSeek R1 ecosystem momentum and robotics commercialization discussions can influence appetite for high beta narrative assets, including crypto proxies.
In crypto terms, that usually means large caps lead first. If BTC holds leadership while smaller beta lags, we're still in controlled risk mode, not broad speculative expansion.
3 real-time checkpoints for the next session. 1. Can BTC hold above 67,000? 2. Does funding stay mildly positive instead of sharply flipping negative? 3. If open interest rises, does price rise with it, or do we get leverage buildup without spot confirmation?
That third case is important. Rising OI with flat price is often unstable and vulnerable to a fast liquidation sweep.
On the other hand, if price grinds higher with moderate funding and stablecoin supply keeps edging up, that's a healthier continuation template.
Now the hot asset call for today, Bitcoin.
Base case for the next 24 to 72 hours, BTC likely tests the upper part of a 66,500 to 69,000 range, with a grind-up bias rather than a smooth one-way trend.
Catalysts, continued marginal stablecoin growth, funding staying positive but not overheated, and relative strength in BTC versus high-volatility smaller coins.
Invalidation, if funding flips sharply negative with clear open interest contraction, and price loses 66,500 with follow-through, then this support structure fails and downside gets repriced quickly.
One line to leave you with: when price and mood disagree, watch liquidity and leverage, not loud narratives.
We'll track those 4 variables again tomorrow at the same time.
This content is for market discussion only and is not investment advice.